May we now invite Research Director, International Economics of Chatham House, Dr. Paula Sabachi, to brief us on the report's findings. Dr. Sabachi, please.
Well, good afternoon, Acting Secretary, Chairman, ladies and gentlemen. It's a great honor to be here today and finally present this report, which is the outcome of collaboration with many people, institutions. So as Anthony has already mentioned, institution here in Hong Kong, Bahrainian Foundation, EPOC Foundation in Taipei, CEIBS in Shanghai, and the Institute of Chartered Accountants of England and Wales in London. But it's the outcome of many conversations and meetings we had in Greater China and back in Europe as well. So I think I can say this is actually the effort of many people. Many of them are already sitting here in the audience. So let me give you a few ideas and a brief outlook of this report. Actually, with you have the executive summary, and you can download the full report from the Chatham House website. Is on our webpage, main page, so it's www.chathamhouse.org, and you can actually screen downloadable. But I give you just the outline and with the hope to kick off an interesting, stimulating conversation and discussion. So first of all, the title, Shifting Capital. This is the starting point for us. Our main question was what we can tell, sitting in Europe, being in Europe, despite the fact we come here very often, but how can we look at the financial center in Greater China in a different way? How can we add value to the already interesting and deep debate in the Greater China region? And so for us, the main starting point was we look at the role of China in the global economy, and the role of China as the second largest economy in the world by size, and also the first exporter. And also we look at the role of the capital markets and the financial sectors in China, and actually we see the discrepancy between what is now the real economy of China and what is the size of its financial sector. So China's a big role in the world economy has not been matched yet by a similar size and a similar importance of its financial services sector and its currency. So we see what China is doing now in terms of financial service, in fact, in financial reforms, as the key step towards changing and making China more integrated in the world economy. So we look at the financial reforms, but also through the financial reform, through the framework of China's financial reform, we look at the rise of financial centers in Greater China. So obviously for us, the full opening of the capital account is the key question, the key issue that needs to be addressed, and therefore the convertibility of the RMB, with the end game of having an international monetary system which will be based, we think, on three key currencies: the dollar, the euro, hoping that nothing will happen in the next week or so, and the RMB. So this, what China is doing, is a fundamental step towards rebalancing the world economy and to close or to reduce the so-called global imbalances. So the report focuses on the financial reforms, so on the steps that China is taking to reform its financial sector, but it focuses on four key financial sectors. And again, the choice here could be controversial, but we decided to go for, obviously, the first and the most important international financial center after London and New York, which is Hong Kong. And then we look at Shanghai, because Shanghai is the designated financial center is the center which should become the international financial center in China, in mainland. We look at Shenzhen and Taipei. In Taipei, we look at very much as part of this game, but being an outsider at the same time. So we look at this, how each of these centers fits in the big picture then Beijing is actually drawing, and is the overall strategy, which includes most of all the RMB strategy, the making the currency international while gradually opening the capital account, and also the development of the financial service. And also one of the key questions, which I imagine is very important for Hong Kong, is how Shanghai and Hong Kong will play with each other during this process. So I anticipate here the main conclusion. The main conclusion, this is a policy-driven process, and this is something which needs to be understood. In particular, if you look at what China is doing now, if you look at it from Europe or the United States, it's a sort of different development from that the other center, like London and New York, experience. So it's also the financial integration in the region is actually will be facilitated through these the financial reforms and the rise of financial centers. And again, we see three financial systems, again, mainland, Hong Kong, and Taipei, as integrating with each other. So the process of reforms actually implies more integration of these three systems. And the RMB is critical in this process, so is what really hold the key, in particular for the development of Shanghai as an international financial center. And then in the end, we see that a sort of dichotomy and tension eventually between policy initiatives and market forces. And we see at the end of this process, we say the market forces should and will prevail and probably determine which one of these centers will be the key international financial centers. So these are a few charts to show again how much the role of China in the global economy has changed in the last 10 years. So again, 2001, the size of the share of China shares of the global GDP was 8%, and 10 years later it was 14%, and is actually growing. But as despite this importance in the world economy, China has a very low financial integration. Actually, it's interesting, in this chart you see the main investment position, China's investment position actually is in the foreign exchange reserves. Now, almost 30% of the global stocks, actually, China is the largest holder of foreign exchange reserves. But actually, with regard to other assets, the numbers are very, very limited. And the other question we address in our report is the strength and actually the power of the banking sector. And in fact, we say this is something in our recommendation. We say this is something that needs to be addressed. The importance and the strengths, well, probably strengths not the right thing, but the importance and the role of banks in the economy need to be reduced, and need to be in the capital market, need to actually be developed in order to provide capital, in particular for SMEs and non-state-owned companies. Again, if we look at the ranking of financial centers in Greater China, and this is the ranking which is published twice a year by Zen Financing in London, a consultancy in London, is actually look at the Global Financial Center Index. This is the only ranking we have. It might be, we might not particularly like the way they produce this ranking, but that is the only game we have, and so we refer to it to just have the sense of which are the most important financial centers. So one point we actually argue in the report is we do not see Shanghai as holding this position is the 8th in the latest report, because exactly of his limited connectivity with the international financial and monetary system. We see that as more as an aspiration for Shanghai than as a reality. But we tend to agree with the role of Taipei, and perhaps Shenzhen, although we think that Shenzhen, probably this ranking is not too generous towards Shenzhen, which is actually an important regional center. Again, if you look at the global IPOs by stock exchange, you can actually see that Shenzhen actually had many deals, but Hong Kong is by far the largest in terms of capital raised. And again, Shanghai is faring quite well in terms of capital raise, but is not even there in that list in terms of number of deals. In other words, again, the size of each deal in Shanghai is much larger than in other stock exchanges, which suggests again a role for Shanghai in serving large companies, not necessarily SOEs, but multinationals and anyway large companies, while Shenzhen has an important role in serving SMEs. Now, coming to the key findings, and I'll try to quickly go towards the conclusion of my brief presentation, is so development of the fourth center is policy driven, where political consideration will actually directly interact with market forces. Beijing is actually somehow the maker of this process, and so at least the initiatives are, at least at this stage, decided by Beijing. So that will determine the shape and determine the development and shape the development of financial centers in the region. And again, the RMB strategies is key to this process. And also by the integration of these centers and system will actually allow Beijing to expand its influence, financially influence in the region. So the outlook for the centers, we think that Hong Kong will remain the dominant international financial center in the region, and by far it will continue to remain the third and one of the most important financial centers in the world. Shanghai has a long way to go. In our report, actually, we focus on the issue of the capital account and the convertibility of the currency, but there are other issues like the development of the legal system, the regulatory system, providing professional services and so on. There were a whole sort of issues which actually in the report we had to focus on some of them because we couldn't deal, at least at this stage, with all of them. But Shanghai basically has a long way to go, and therefore Hong Kong will remain. And Hong Kong has to strategically think how to retain its own leadership while collaborating with Shanghai and developing some kind of synergy with Shanghai. We see that eventually Shanghai will become an international financial center. But again, that all depends on the policy initiative in Beijing. We think that the size of China and the whole region is such that two international financial centers could actually be in the same, in some kind of proximity. So I think the size of China is such that Hong Kong and Shanghai can actually coexist eventually as two international financial centers. So a few words about the RMB business. The RMB strategy, Beijing's RMB strategy has really changed the face of Hong Kong, and again, this is a way to show, just looking at the bond market, how much has changed in the last 2 years. So there have been bonds issued in Hong Kong dollars up to 2009, and the data is by October 2009, and then also the bonds issued in RMB later on. So you can see quite a substantial and interesting difference. I will skip this, and again, this shows the way to go. So there is scope. If you look at the market capitalization, we did some calculation here based on market capitalization and GDP. We think then there is some way to go, some scope for expansion for all the centers. So again, the targets that have been set for Shanghai in a document which was published early this year are probably very realistic. And again, provided that the whole infrastructure in the city will be built at the same time. Shenzhen is going to be a domestic financial center for the region, for the Guangdong region. It is a very important role to be played here, serving the SMEs and the startup, high-value startup located in the region. Taipei, we can also build on its experience in dealing and with high-tech SMEs, and actually building on the network then Taiwanese entrepreneurs have built across Asia. Obviously, there is scope here to deepen the financial cooperation between the mainland and Taipei as a financial center on the back of the already existing cross-strait cooperation. But actually, the Taiwanese authorities, being somehow in the periphery of Greater China, the financial periphery of the mainland, they will probably need to think how they can harness the opportunity in a strategic way. In other words, the difference between Hong Kong and Taipei is that Hong Kong really is part of the same country, two systems, but really there is a lot of collaboration between the authorities in Beijing and Hong Kong, which is not yet or the case with Taipei. So this is where we see, again, Shenzhen as the regional financial centers, and now the recommendations, they are probably, you think they are probably you think they are quite basic, and in fact, actually, there are some basic points that still need to be addressed. So one is to moderate the government intervention. So again, probably start to withdraw a bit the intervention and let the market forces to prevail a bit more. To accelerate the reform of the banking sector is our second recommendation. And at the same time, here is the third recommendation, is to develop capital markets in order to help, in particular, the SMEs and private companies. For Hong Kong specifically, we suggest then there should be increased exposure to other BRICS markets, because these are the emerging economies, and this is where in the future there will be more business and new business. And also, we suggest to promote more cooperation between Hong Kong and Shanghai, in particular in developing the not only the financial infrastructure, but also the ancillary services. And then, again, developing Shenzhen as a regional financial center and carve a niche market, market for Taipei in response to Beijing strategy. So that's it, and now look forward to the comments. Thank you.